Illustration 11. MK Limited manufactures and sells a single product X whose selling price is 40 per unit and the variable cost is 16 per unit. If the fixed cost for this year are 4,80,000 and the annual sales are at 60% margin of safety, calculate the rate of net return on sales assuming an income tax level of 40%. First we will discuss the first part and then we will move on to the second part. Here for product X, the selling price per unit is 40 and the variable cost is 60 and the fixed cost is also given and the margin of safety is given as 60%. We have to find the rate of net return on sales. Net return on sales, what will be the equation for net return on sales? The net return on sales is equal to net profit divided by sales. Net return on sales will be net profit divided by sales into 100. So we have to find the net profit and we don't have the sales value. We also need to find the sale amount. How can we find the sale amount? From the data given below, we can see that. So for product X, the selling price per unit is 40 minus variable cost per unit is 16. We get what? Contribution per unit is 24. From it, we can find the break-even sales quantity. Break-even sales quantity is fixed cost by contribution per unit. Fixed cost is given in the question as 4,80,000. So 4,80,000 divided by contribution per unit 24. We will get 20,000 units as the break-even sales. And percentage margin of safety is given 60%. So what is the formula for percentage of margin of safety? Actual sales minus break-even sales by actual sales. So 60% is equal to actual sales minus what is break-even sales? 20,000 by actual sales. From this we can find out the actual sales as 50,000 units. Now we can find the profit easily. X sale value is equal to 50,000 into selling price per unit 40, that is 20 lakh, minus variable cost 50,000 into variable cost per unit 60, that is 8 lakh, and we will get contribution as 12 lakh, minus fixed cost given in the question 4,80,000 gives what? Profit 7,20,000. Here there is a tax of 40%, so tax 40% less 2,88,000. We get net profit as 4,32,000. We have also seen the net return equation is net profit by sales into 100. We found the net profit 4,32,000 divided by, we also found the sales 20 lakh into 100. We will get the net return as 21.6%. Second part question is, for the next year, it is proposed to add another product line Y whose selling price would be 50 per unit and the variable cost is 10 per unit. The total fixed costs are estimated at 6,66,600. The sales mix value of X is to Y would be 7 is to 3. Determine at what level of sales next year would MK Limited break even. We need to find the break even point when there is a sales mix of 7 is to 3 between product X and Y. Let's see. Give separately for both X and Y the break-even sales in rupees and quantity. So we can find for contribution for both product X and Y. Selling price per unit is 40 for X and 50 for Y. Minus variable cost per unit is 16 and 10. It is given in the question. So we get the contribution per unit 24 and 40. What is the sales mix ratio? 7 and 3. We can find here, in order to find the total break-even point, we need to have the total fixed cost by weighted average contribution, right? So weighted average contribution will be contribution per unit, that is 24 into number of units of X plus contribution per unit of Y 40 into number of units of Y divided by total number of units 7 plus 3, that we will get as 28.8 per unit weighted average contribution. Now we can find the break even point, total fixed cost by weighted average contribution. Total fixed cost is given in the question as 6,66,600. So that divided by weighted average contribution 28.8, we will get the total break even point as to 23,145.8 units. Now we can find the break-even point of X in both quantity and amount. Break-even point of X is 23,145.8 into weight of X. What is the weight of X? 7 divided by total 10. So that 23,145.8 into 7 by 10, that is 16,202 units, and the amount will be 16,202 into the selling price per unit of X, that is 40. So we will get the break-even point of X as 6,48,080 rupees. And the break-even point of Y will be this total break-even point into weight of Y. 23,145.8 into weight of Y is what? Sales mix 3 divided by 10. So we will get the break-even point of Y as 6,944 units. Amount of Y will be, break-even point of Y will be 6,944 into the selling price of Y. Selling price of Y is what? 50. So into 50 we get 3,47,200.